Welcome to Invest Education Hub, where we make smart investing simple. Today, we're tackling a huge question: college or investing? For decades, the path to success seemed pretty clear, right? Go to college, get the degree, land the job. But what if that's only half the story? We're going to explore two very different paths to financial success, one through the classroom and one through the stock market. Stay with us until the end. This might just change the way you think about money, education, and success. And hey, if you enjoy learning how to make your money work for you, don't forget to like and subscribe.
You know the drill. For generations, we've all been told the same thing. Go to school, get good grades, go to college, get that piece of paper, and boom, you'll get a stable, well-paying job. It was the blueprint for a good life, a promise of security. And look, for a long time, it really worked. A college diploma was like the golden ticket. But the world has changed, hasn't it? The price of that ticket has absolutely skyrocketed, and that guarantee it used to offer, well, it's feeling a little less certain these days.
So we have to ask the big question. In today's world, is that traditional path still the only way? Or could learning how money actually works, and I mean really works, and investing it from a young age, create a much more direct route to financial freedom? Now let's be super clear. This is not an anti-education story, not at all. Think of it as an exploration of two super powerful kinds of learning: the formal education you get in a classroom and the financial education that quietly, steadily builds your wealth over time.
To really get our heads around this, we're going to follow two different journeys. On one side, you've got the traditional route. It's the path we all know: higher education, which usually leads to a degree, a job, but also that heavy backpack of debt. And on the other side, we've got the investing route. This path is built on financial smarts, the simple habit of consistent saving, and the incredible, almost magical power of compounding. These aren't just ideas on a slide. These are real choices with very, very real results. So to bring this to life, let's meet two people, Alex and Jordan. They're starting from the exact same place, but they're about to make two very different choices about their future.
Okay, so first up is Alex. Alex decides to take that well-worn traditional route. At 18, they head off to college, full of excitement and ambition. They put in 4 years of hard work, studying, learning, you know the deal. But that experience comes with a hefty price tag. We're talking tuition, books, rent, the whole shebang. So on graduation day, Alex is holding a degree, which is awesome, but they're also carrying around $40,000 in student loans. That is Alex's starting line in the real world, a negative net worth. And let's be honest, that's a familiar story for millions of people.
Now let's switch gears and look at Jordan. Jordan decides to do something totally different, at least for now. Instead of enrolling in college, Jordan gets a job and starts studying something else entirely: money itself. Jordan's classroom, it's the real world. And the goal here isn't just to make a paycheck. No, the goal is to figure out how to make that paycheck work for them. It's a really powerful shift in thinking, from just earning to actually growing. So how does Jordan's journey begin? Well, it doesn't start with some crazy lucky stock pick or a crypto gamble. Nope, it starts super simply, with an initial investment of just $1,000 and a promise to add another $150 every single month. The whole strategy is about consistency, not trying to get rich quick.
So Jordan's very first move is putting that money into an S&P 500 index fund. What on earth is that? Well, an index fund is just brilliant in its simplicity. Instead of trying to be a genius and pick individual winning stocks, which is really hard, you just buy a tiny little piece of all the top companies in the market, like the 500 biggest companies in the US. What that means for you is instant diversification. You're not betting on just one horse, you're betting on the whole race. It's one of the most recommended starting points for new investors, and for a very good reason: it just works.
But Jordan's education doesn't stop there. It evolves. It all starts with that simple index fund, right? But as Jordan learns more, the portfolio gets a little more sophisticated. They add bonds, which are kind of like the shock absorbers for your portfolio during bumpy rides. Then they add REITs, that's real estate investment trusts, to get a slice of real estate income without actually buying a building. Then come dividend stocks for a regular cash flow, and international funds to spread the risk all over the globe. See, this isn't random. It's a step-by-step process of building a seriously resilient financial engine. So over these 7 years, Jordan didn't just tuck money away. They built something. They built a financial engine. What started as just a single fund grew into this diversified, self-managing portfolio. It was basically a masterclass in real-world financial education. And Jordan's strategy?
It follows a really clear, logical plan that you can actually break down into 4 simple steps. Step 1, start broad with those index funds to get market exposure. Step 2, add some stability with bonds to handle the ups and downs. Step 3, start generating passive income with things like REITs and dividend stocks. And finally, Step 4, diversify across the globe with international funds. This is basically a repeatable recipe for building wealth.
All right, let's fast forward. 7 years have gone by since Alex and Jordan started down their different paths. Alex has a degree now and has been working for a few years. Jordan's been working and investing that whole time, so it's the moment of truth. Let's put their finances side by side and see what the results of their choices actually are.
Let's check in with Alex first. So after 7 years, Alex does have a stable job, and that degree definitely helped open some doors. But financially, the story is a bit tough. Even after making payments for a few years, that $40,000 student loan is still hanging around. It's like an anchor. Most of that early income has gone to paying off debt and just, living, leaving almost no room to save or invest. Alex basically started the race from way behind the starting line.
And now, Jordan. After 7 years of working, learning, and consistently investing, Jordan's net worth isn't negative $40,000, it's not even zero, it's a positive $50,000. That's a $90,000 swing from Alex's position. Let that sink in. And this wealth wasn't built on a huge salary or some lucky break. Nope, it was built methodically, brick by brick, through financial education, discipline, and the absolute unstoppable power of time. So you're probably wondering, how did Jordan turn $22,000 into $50,000? Let's break it down. Over those 7 years, the money Jordan actually put in from their paychecks was about 22 grand. But the portfolio's worth 50,000. So where did that other 28 grand come from? Well, my friends, that is the magic of market growth and compounding. It's where your money starts making its own money, and then that money starts making money. It's like a snowball rolling downhill. And Jordan just started rolling it early.
Now, it would be really easy to look at this whole story and just say, okay, forget college, I'm just going to invest. But hold on, that is not the real lesson here. The story of Alex and Jordan isn't about one path being right and the other being wrong. Not at all. The real secret, the ultimate success formula, isn't about choosing one over the other, it's about figuring out how to combine them for the most powerful result. This is basically the toolkit Jordan used to build that wealth. You've got index funds as the foundation. Bonds are your safety net. REITs and dividend funds are your income generators. International funds spread your risk. Knowing what these tools are and how to use them, that's the heart of a good financial education.
And this brings us to the most important point of this whole thing. A formal education, like Alex's degree, is incredibly valuable. It can seriously boost your ability to earn a good income. It teaches you how to earn money, but that's only one half of the equation. Financial education, the path Jordan took, teaches you the other critical half, what to do with that money once you have it. It teaches you how to keep it, how to protect it, and most importantly, how to make it grow into real, lasting wealth. You absolutely need both.
At the end of the day, what are we all really working for? Is it just a fancy job title or a diploma hanging on the wall? Or is it something more? Maybe real success isn't just measured by the degrees you have, but by the freedom you have. The freedom to choose how you spend your time, to travel, maybe retire early, to just live life on your own terms. That is the kind of freedom that financial independence gives you. So the real question isn't whether you should follow Alex's path or Jordan's path. It's about how you're going to integrate the best of both into your own life. Your path to freedom starts right now with the decision to learn. So what will your first step be? Thanks for watching Invest Education Hub, where financial confidence starts with understanding. If this video inspired you, share it with someone who's ready to take control of their future. Keep learning, stay consistent, and remember, the smartest investment you can make is in yourself.